What is Contra Transaction? What is Intraday Transaction? Know-how in share. We provide guidance and support for beginners and existing investors to explore and achieve investment goals. In our Facebook page, Know-how in Share, we provide short videos for stock market knowledge, experience, and surviving tips. Let's talk about what is Contra Transaction. Contra transaction is a procedure of buying and selling stocks before the payment date. For contra account, you may use the available trading limit to make purchases first, even if your account do not have the available balance at the moment. You may make payment within T+2 or T+3, or you may sell it off latest by T+3 afternoon. If you fail to make payment or sell off, your outstanding purchase contract will be forced sale by broker. What is T+2 or what is T+3? T is transaction day. T+2 is 2 days after the transaction day. And T+3 is 3 days after the transaction. For any profits you make within the contra period is called contra gain and will be paid by broker. But if there's any losses, you need to top up and make payment for the contra loss. However, some broker not allow you to make payment on T+3, or they might force sell your shares earlier. It depends on the broker firm's policy. How about intraday transaction? Intraday transaction is buy and sell within the same day. Normally, the brokerage will be cheaper compared to contra transaction. In summary, contra transaction is a trading facility offered by broker for you to buy and sell before the payment date. As a result, the broker will pay you for the contra profit, or you need to make payment for the contra loss if there is any. Feel free to follow our Facebook page, Know-how in Share, for stock market knowledge, experience, and surviving tips. Know-how in Share, your share market buddy.